Hello, accounting students, and welcome back to our fantastic video series on Chapter 5. We're looking at Lesson 3 in Chapter 5, which is dishonored checks and electronic banking. So remember that in our last lesson we looked at how we account for canceled checks or checks that have cleared our bank account. In this lesson we're going to be looking at checks that are called dishonored. And a dishonored check is a check that the bank just refuses to pay. And they might do this for a couple of reasons. Sometimes, the check looks like somebody altered it, or the signature doesn't match whatever the signature card is at the bank, or the amount that we wrote in words doesn't match the amount that we wrote in numbers. Sometimes the check is post-dated and they won't take it, or sometimes someone has issued a stop payment on the check and so the check can't be canceled. Yeah. So anytime you have a situation where the bank won't cash the check, it's called dishonored, and we need to know how to account for that in our bank's records. So as we look at the lessons here, we're looking at completing record keeping for a dishonored check, journalize an electronic funds transfer, and then doing the journalizing for a debit card transaction. So first of all, check that the bank refuses to pay is dishonored. A check is dishonored by the bank because of insufficient funds or other reasons, but insufficient funds is probably the most common one. Non-sufficient funds, and we also refer to it then as an NSF. So you'll frequently hear people refer to checks that there's not enough money in the account as an NSF. It's basically a bad check. What you definitely want to remember is that writing checks that you know are bad is illegal. So if you write a check and you know that there's not money in the account, that's actually illegal. And if you alter or forge a check, also illegal. So definitely activities we don't want to be doing. When we're going to go ahead and record these on a check stub, which remember our check stub is our records within our business of what's going on in our checking account. So we're looking at our check stub. You can see we have the balance brought forward from our previous check and what we're going to, our previous activities within the account. What we're going to do is write dishonored check under other, and then we're going to write the total amount in. Looks like it was for $225. It's also including the service fee that the bank charges. Whenever there's an NSF check situation going on, the bank always charges the business or the account holder a fee for processing that. So what you'll often find is that businesses will pass that fee on to customers and try to collect that fee from customers if they possibly can. So what we're looking at in this case is probably a $40 NSF fee plus whatever the check was when it was actually written. You're going to go ahead and calculate out the subtotal, and that's what our check stub is going to look like. To journal this dishonored check now, remember our accounts receivable is going to go back up. Okay, and our cash balance is going to go down because we didn't actually receive that cash when the payment came through, so we need to post a transaction so that we can reflect the changes in our actual account. We received a notice from the bank of a dishonored check, Valley Landscaping, for $185 plus the $40 fee. So we're going to use a memorandum as our source document for this activity. And you'll find most of the time when you have dishonored checks that you're using a memorandum as your source doc. So within our general journal, we're going to go ahead and debit accounts receivable and credit cash. So we write the date in, accounts receivable and the amount, cash and the amount, and now we have a debit and a corresponding credit. Source document looks like memo number 52. Okay, so electronic funds transfer. Now, I'm sure many of you have heard folks talking about an electronic funds transfer. Electronic funds transfer, sometimes known just as ETF, is when we send cash payments via the computer and we don't use any checks or any other paper documents to move the money around. So that's ETF, electronic funds transfer. Now, when we do electronic fund transfer, we're actually paying cash on our account with Merniac, wasn't that fun, Enterprises for $380. And we're going to use memo 18 to note that. So our accounts payable is our debit, and our cash account is our credit. Okay, so when we look in our general journal here, on the 5th, we're noting accounts payable as the debit and cash as the credit. And remember, accounts payable, the balance is decreasing, and cash, our balance is decreasing. This again is where it's really important to keep track of where is the normal balance on the T account for whatever activity we're posting. So we put the date in, the accounts payable part, which is the debit, the cash part, which is the credit, and then noting our source document or memo number 18 for that activity. Okay, so journalizing debit card transactions. Bank cards that automatically deduct money for a purchase from our checking account is a debit card. And I would imagine many of you have some kind of debit card on an account if you have an account at the bank. So we purchase supplies for our business using our debit card. Since the money is coming directly out of our checking account, we are going to be noting the activity with cash. So our supplies are increasing and our cash is decreasing. So noting this in the general journal, the date is the 8th, June 8th. Oh, wouldn't it be nice if it was June? The weather would be so warm and refreshing. Anyway, so the title of the account is supplies. The title on the second account then is cash. We have a debit for $75 to supplies, which increases our supply balance, a credit for cash, which is decreasing our account balance. All right, so audit our understanding. We want to make sure we know 6 reasons why a bank might dishonor or not pay a check. We want to think through which account would be credited when electronic funds transfer is used to pay cash on an account. So in this one, we would want to consider what 2 accounts would be affected and which one is going to be the credit. And then which account is credited when a debit card is used to purchase supplies. Think about what 2 accounts would be impacted when we're using a debit card to buy supplies, and then where is the credit. All right, so now that you're done with lesson 5-3, you should go ahead and answer the questions on the form online. You should also go ahead then and do the work together and on your own in Aplia. Have fun, everyone.